I kind of feel like we've already started.
I think so.
Andrew Shaw, the Chief Strategy and Planning Officer at Transnet. How has Mining Indaba 2024 been for you?
Well, what's amazing about Mining Indaba is every year you come, it just grows bigger and bigger and bigger, and the level of interest is just more and more significant. So I guess what it shows is just how important this industry is for South Africa and for Africa. And the expansion in Africa is a big theme, so you see that a lot. So yeah, very exciting. I've really enjoyed myself. Great conversations with people. The importance of transport and logistics comes across all the time. You can mine anything you like in Africa, but you've got to get it to a port, and that's critical.
Brilliant. How has the reception for Transnet been relative to the new strategy that is going to be kind of like cemented and started to be rolled out? What's the reception been like for somebody like yourself who's in strategy and planning and people wanting to know where Transnet is going and how they're going to get there?
I think the big customers of Transnet are still very positive, but they are frustrated with Transnet. And essentially that frustration is because the volumes that we've shifted on the big commodity corridors, manganese, iron ore, coal, ferrochrome, magnetite, are not where they would like them to be or not where they were in the past. So, that's the frustration. But what I do see is a real commitment to talk to us, to engage, and also a recognition that in the last 6 months we're doing everything we can to up the volumes. And actually people are very pleased with the progress. It's not where we would ideally like it, but at least people are starting to see an upward trajectory, which is great.
100%. Now let's talk about maybe government's role and their marching orders to Transnet. What are some of the legislations that government is maybe bringing in, and how is Transnet responding to these new legislations?
Look, the policy environment has changed quite dramatically. So March 2022, the white paper on rail reform was released. That focuses really on changing the whole rail environment and bringing in a level of competition, separating the infrastructure from the operations, creating a tariffing system for track access charges that Transnet Freight Rail operations would have to pay to the infrastructure manager, and allowing third-party access onto the system. So we've got to prepare for that. It does need to be supported by some additional legislation that's still on its way, but the first element of that legislation is called the ERT Bill, which is the Economic Regulation of Transport Bill. That would create a very large transport regulator, take the ports regulator, integrate that in, take the existing aviation regulator, which is part of the department, integrate that in. And so we'll have one large regulator that would be responsible for all tariffing of all modes of transport. So that changes things dramatically. I mean, up until now, we've been able to set the price as we think fit, and now now there'll be a regulated price for
the entire market, I guess.
For the rail market, there is already a regulated price for the ports market from an infrastructure standpoint. At a terminal operator or a rail operator perspective, you can still determine the price you want to charge a customer. If the regulator sees that you have more than 75% dominance in a particular market, probably a corridor, then they can initiate an inquiry. But for track access charges, for the port charges leveled by Transnet National Ports Authority, the regulator will actually determine what those tariffs will look like. It's normally based on us submitting a tariff application, same as goes to NERSA, which is very publicly known around electricity. And then the regulator assesses that and determines should we allow them to have that tariff charge for these types of customers. And quite often they push back and say, no, we'll give you a lesser amount, etc. That's generally been the norm for most regulators in South Africa.
Brilliant. Let's talk about investment. Obviously, once you've got the strategy done, once you've got the plans ready, you got to start saying this is where we're going to be investing. Yep. What are some of those investment plans into the future, immediacy, and also medium term and long term for Transnet at this stage?
Okay, so I mean, the first place to start around investment is to say that from a debt standpoint, we're overcommitted. And so this is part of the challenge why we've had to reach out to National Treasury, and they've had to give us a bailout and a government guarantee. And that's because no finance institution would fund us with additional debt on the basis of our current financial position. So that's a tough change. That means that National Treasury bears a lot of control of what happens to Transnet in this environment. And the National Treasury's approach to that is to align with this emerging policy and say you've got to get the following things in place to reform Transnet. You cannot continue on the current trajectory. We want to see these changes. So that we're expecting, and we're building that into the strategy, and it's now widely known Transnet that there's certain guarantee conditions. However, we have a lot of infrastructure that needs a significant amount of investment. I think people that in Transnet know that the infrastructure in most parts of the organization, in ports and rail, is insufficiently funded. And even with all these debt constraints, we've got to find a way to fund this infrastructure. So part of the reform process creates an infrastructure manager which can allow the private sector to come in to fund some of that infrastructure. We're also in discussions with government about what we call a bridging gap. So we have a view that at the moment we move about 154 million tons at the end of this financial year, at least that's our target. And we should be able to drive that up to about 225 million tons, maybe even beyond, if we can bring additional players on board or if we can enhance our own recovery. But we will need to fund the quality of the infrastructure to get there. At the moment, the train turnaround times are restricted by the quality of the network. So we call that a kind of bridging gap. And Transnet's been engaging with National Treasury and some of the multinationals about a kind of bridging gap. We think it's probably between 45 billion, 65 billion. Some people put up the funding gap to be in the order of 100 billion plus. It really depends on how you take it and what time period you need to fund in. We've also got to do something that we can deliver on. So we can't make the number too big.
Maybe let's talk about the Lobito corridor as a concept, as a model of working together and being collaborative in terms of infrastructure. How is that project different from others? And what can we learn from this project going forward in terms of how we strategically plan and deploy resources and manpower?
Thanks. That's a great question, because at this conference, that corridor has been discussed significantly because it's almost like a sea change event in Africa's minerals and logistics working together. The concession is for 30 years. It's from the port of Lobito up to Lubumbashi, Kolwezi in the bottom end of DRC. That's really where this big minerals deposit is: cobalt, copper, some manganese and some other core commodities. A lot of that used to move by road. In fact, a lot of it moves through the port of Durban, and you can see those trucks coming down from through Zim and down to the port. We will probably lose some of that traffic to that Lobito corridor, but that also raises the efficiency of the mines within that area. The concession is set up in such a way that government, the Angolan government principally, because they own the vast of the length, it's 770 kilometers. They own, I think it's about 500 to 600 of that. It was upgraded by the Chinese. They continue to own that, but they will make it available to the concessionaire, who will invest in that infrastructure and provide rolling stock, etc. And they will expand then operations to drive exports from Lubumbashi out of the port of Lobito. Interestingly, when I look at their forecast, they have almost the same amount of import volume as export volume. So they would also serve the mines with sulfuric acid, with all the within the bottom end of DRC, all the requirements to keep those mines running. So it's got a really strong business case model. And I think government is pushing us roughly in the direction of involving the private sector in those types of initiatives. But we have to design them to make the best sense for Transnet.
100%. You're actually speaking about almost a proactive approach where I'd say African countries' leadership is starting to see that we're better together and maybe even stronger together, right? Now, give me almost like a bird's eye view into how we are going to be working as maybe the SADC region to make rail a priority, and also what role Transnet plays in that now going forward.
I guess one of the challenges that we've had is that in the past we had a really strong Africa strategy, but because of our challenges within South Africa, we're probably not quite as focused on Africa as we should be. The importance of the North-South corridor, the linkage into Maputo, which as a port is doing extremely well, cross flows into Walvis, all of those are really still part of making the SADC region more rail dominated, being more efficient, etc. Interestingly, our first move as a country around separating infrastructure and operations has not been followed by our immediate neighbours. It has been followed by other countries. So it will be interesting to see what other countries do in response to that. Will they equally say, well, actually we're going to follow the South African model? Or will they say, no, we'll interconnect across the South African model? I mean, one of the points I made this morning is that CFM as the Mozambican operator already sees the opportunity to come across the border and operate on our network using their own wagons and locos. That's a great opportunity for them, but will they mirror that opportunity for us to be able to operate in their network?
Yes, quid pro quo.
Yeah, exactly.
So now that we're talking about this quid pro quo, I think a lot of times people associate Transnet maybe solely with mining, but when we look beyond mining, what are some of those key strategic pillars that Transnet is maybe looking to kind of really double down on, and also to reinforce maybe in new supply chains where it can also be competitive and effective and efficient?
Now, again, there's a great theme that you've got is around how do we actually drive out more rail volumes that are non-mining based. We know we've got a huge backlog of mining-based volumes that we can move, probably another 40 to 50 million tons on the system that if we had the available train sets to move them, we could probably move to the ports. What the University of Stellenbosch has identified in terms of their support for the presidency on the freight logistics roadmap is that as a country we could be moving about 300 million tons of traffic on the current network, and we move about 154, so we're about halfway to what we could move. And a lot of that would be what they term rail-friendly freight, and a lot of that is manufactured freight, principally in containers. But it could also be palletized freight. If you follow other global models, palletized freight is actually freight that is moved by a forklift and then put onto a rail car and then moved to another destination. I think the opportunity for us to move that freight is huge. I mean, if you drive the N3,
100%,
the trucks are just lined up
down the N3,
And there's a lot of private sector players who are very interlinked into that market. They're third-party logistics providers. Let's not name all of them, but you know who they are.
Yeah, 100%.
They serve all the big retailers. They serve the shipping lines that are very keen to get into rail. So I think there's a huge opportunity to draw them in as third-party
upstream
operators.
them. Yeah, 100%. Now, I want now to pick your brain on this. You understand the strategy. You understand the plans. I want you now to say to me and to everybody who's listening, what does the future look like, right? With all of these plans, I mean, it's always great. A plan is a plan, but you need it to be executed properly. But what does the future look like when you sit in 5 years' time and all the plans that you've worked with your team and you've enacted with all the ODs, what does that future look like for Transnet?
Okay, so I think Transnet is on a big change agenda, and perhaps bigger than we foresaw 2 years ago. So the focus of the segment strategies, which is the last 2-year focus, which is about driving volume, is still critical and drawing the private sector into that. But I think one of the big interventions is the impact of the freight logistics strategy, which comes out of the NLCC process in the Treasury. The freight logistics roadmap, which has been tabled in Cabinet in December last year, so it's very recent, really paints a picture of a different Transnet. It paints a picture of an infrastructure set of operating divisions, which would be Transnet Pipelines, Transnet National Ports Authority, and then the infrastructure manager from TFR. And those would remain 100% state-owned, and they would be regulated in terms of the tariffs they can charge. And we would use them as really the conduit of supporting the infrastructure and the growth of infrastructure.
The backbone, really.
The backbone, exactly right. And then we'd have a set of operating units, which is principally TPT, but TFR Ops as well. And that may be made up of a collection of different focused companies. Some we may draw the private sector in, some we may continue to operate on our own in competition with the private sector, but they would be exposed to much greater levels of competition than we've been used to. That'll take some time to emerge. So in the rail environment, there's no huge railway operator that can come in and compete with TFR at this point in time. But there are a lot of smaller guys that would like to come in. So space would be made available, and over time, that competition will grow. And I guess the same will happen in the ports, particularly container port area.
Andrew, they say that there's a saying, it's not in Tennessee or in Texas, but they do say that in the land of the blind, the one-eyed man is king. And I appreciate the time that you've given us to open our eyes to the strategy, to some of the plans, but also the vision. Because at the end of the day, somebody's got to open their eyes before everybody else and tell them where to go. And we believe that you are that person. Ladies and gentlemen, the Chief Strategist and Planning Officer for Transnet, Mr. Andrew Shaw. Thank you so much.
Thank you so much for your time.
Cheers.
Really great to be here.
Thank you.
Thank you.